Let's discuss Pilot's income statement report. Once you've completed your stock entry, confirmed and troubleshooted any possible inaccuracies and updated your entry sheet, you can move on to our Reporting tab and investigate your income statement report. To open up this report, select Reports, then Income Statement. Here we can see our main income statement window. We can view the period selection for this report in the top left corner here. It is also important to note that all of these values exclude tax. We can view our cost center breakdown by selecting which cost center to view here as per our system setup. This report will include all stock and expense categories. We can view our category abbreviation and description here, followed by the cost percentage for that category. The cost percentage is a percentage on your turnover sales indicating how much stock was used per category. In other words, the percentage of the direct costs for that category. Budget percentages can be set up individually by each store, including franchise stores, since budgets may vary between provinces due to availability or demand. If trying to set up a budget, keep in mind a target cost of sale percentage or food cost target, for example 37%. You can then determine individual category budgets, knowing that the total budget percentage on all direct cost categories should not exceed the 37% food cost. Direct costs include retail stock, food and beverages. Expense categories can include items like cleaning materials, uniforms or maintenance. Another way of determining budgets is to have a look at your average cost percentages over 6 months of sales. When a budget is entered and confirmed, a variance will kick out the rand value of stock overused or underused in each category as seen here. The open column refers to the opening stock file count, close to the closing stock file count, and purchases being your purchases entered into the system during the period selection. Before evaluating the income statement, once the report opens, select the period first and choose the relevant stock period. This could be a Sunday to a Sunday or month end to month end. Stock date entries are colored blue, and it's important to note that the accuracy of this income statement is determined by both of these stock files, including the purchases loaded during the stock period. The code column here can be edited and set up if allowed to organize or group certain categories together, i.e. direct costs being noted as Ds and expense categories as Es. Lastly, the cost centers allows you to select and view the income statement for a certain cost center only, as mentioned previously. We can then, for example, select to view the food cost center only versus the beverages cost center. To view this income statement, after selecting the stock period, select Print. Again, all totals seen here reflect ex-VAT totals. We can see here our total sales, any airtime sales less if applicable, your net sales and the direct costs. The direct cost value is the actual stock usage on direct costs. In other words, we can determine the cost of sale through the opening stock file plus purchases less closing stock. We then have our gross profit here less our expense total. If we were to load and capture all expenses within the business, this income statement should reflect an accurate picture of your business's finances. However, many owners choose to not load all expenses, especially if pertaining to sensitive information such as salaries or rent. When going through these categories, note that any category that has a negative usage should be flagged and singled out. We should diligently investigate all aspects within that category: opening counts, purchases made, daily controls, and closing counts entered, so that we can ensure we are satisfied with the end result of this report. The only category allowed to have negative usage is the recipe category, since you can produce stock in that category, therefore possibly ending with more stock than what you opened with. Since you are not buying in any stock to validate the increase from this report, you will then reflect a negative usage. Lastly, if setting up the codes, once you group these categories according to Ds or even subcategories like D1 and D2, the categories will reflect within that group as seen here. Expense categories will reflect beneath all direct cost categories. This will include your ZC or cash up variance category unless this has been arranged to be removed through the owner of the business with a signed agreement for it to be removed. Once you have gone through the statement, you can further analyze your stock discrepancies by investigating the raw material usage report and other daily control reports. We will discuss these reports in greater detail within their own tutorials. Feel free to check out our reporting playlist if you would like a more in-depth look into our stock analysis. If you found this tutorial helpful, consider subscribing and hit that like button.